Mike Rosehart Show. We're live again for another power hour for our weekly live Q&A. So if you have any questions, bring them down below. Today I wanted to talk a little bit about some of the fears that I have. 2022 has started off as a very rocky, bumpy year. When we look to the NASDAQ, the S&P 500, the NASDAQ had one of the worst starts we've had, I think, in the last 2 decades to this year. We were down at one point, 3 weeks ago, we were down like 14% year to date. I think almost at the low point of 15% year to date. Big names like Facebook down 49%, PayPal down 60%, Alibaba was down 70%, I think it was. A lot of big names. Amazon had almost no growth on the 1-year chart. A lot of names just pounded into the dirt. And I had a very tech heavy, well, half of my portfolio is tech heavy, half of it's a dividend blue chip stuff where I collect dividends for Canadian eligible companies, and mostly is utility sector. And that's done really well. Financials, utilities, telco has done really well through all of this because you can pass the inflation on. But I want to talk about inflation, I think, first and foremost, and how I guess the government has over the last 2 years printed themselves into a situation of such high inflation, and they're at a position now where they basically have to taper to avoid worsening inflation. But the inflation numbers aren't, as accurate as I would like them to be. If you look at some of the more, shadow statistics where you adjust the CPI or the consumer price index based on weighting of how people actually spend their money. For instance, people spend, a third to 45% of their annual budgets on housing. Housing in Ontario, Canada, as an example, rent is up around 30% on new listings, and the actual prices of homes has gone up about 45% on the year. In certain cities, every city is a little bit different, but between 20 and 50% we've seen in some smaller communities, lesser, some bigger communities more. It varies throughout the province, but that combined with the fact that we will now see bank 5-year posted rates in the next 6 months to a year, not even my prediction, they're coming out and acknowledging this is happening. We're going to see 3, 4, 5%, 5, 7, and 10-year mortgages here in Canada, and in the U.S. it's already worse. The yield curves are directly correlated to recession. So every time oil or commodity prices spike 50% like they have, a recession has followed. Every single time. So a recession is coming. Every indicator that we know signifies that a recession is coming. But it's a very tricky line because we don't know what the catalyst is going to be to bring us into said recession. Food prices are up around 25 to 35%, specifically for organics, anything imported, anything related to any of the COVID lockdowns. Again, we're coming out of a pandemic too, so we're coming off of some of the worst supply chain shortages, some of the worst great resignation type of employment issues that we've had in years. There's just a number of things coming together right now that, to me, signals we're looking at recession in the next, we'll call it 0 to 24 months. It's happening. I think more likely than not on the the market side, what we'll see is sort of trading sideways. With real estate, I could see, I guess without any other factors being considered, I could see that it makes a lot of sense with the downward pressure pushing prices down as interest rates rise, which they will probably see 4 to 6 hikes on the interest rate spikes. Each time it spikes, each time it goes up, say even a 0.25%, 25 basis points, each time that happens, it should push real estate prices down. So we should see a year where there'll not be a crazy spike in real estate prices starting now. We should see a bit of a pullback. But the blood doesn't really start until the FOMO aspect goes away. So fear of missing out, right? People jump in as speculators to invest in real estate. But as soon as you have a 6-month period where it's flat or down, everyone says, I'm not missing out anymore. I better wait and buy when we're at the bottom. And so they don't feel like they're missing out by waiting because the market's no longer climbing. As soon as you start having losses, that's when we get into a big dip. We're talking like in Ontario, Canada, in 2020 in real estate, we saw a 10 to 15% drop in the span of a month and a half. And we saw average days on market double, right? So it's something that, I'm glad that I sold a large percentage of my real estate portfolio off. I continue to sell more off. At the same time, I've heard, a lot of bulls, a lot of real estate bulls say, hey, the rising interest rates and the lack of affordability doesn't matter. People have more money than they've ever had in the top third of people. Renters will continue to rent, and more of those wealthy people will just buy more on the dip. And that's certainly true to an extent. But as interest rates rise, like right now, you could have got, 6 months ago, you could have got a mortgage at 1.25% 5-year variable. We're now looking at 5-year fix in the 3%, and we're talking even 4% coming. When your cost of interest on your mortgage is now 400% higher, your affordability drops. What you can afford to pay drops. So that's going to play out in reducing some of the heat in the market. At the same time, our government, our new majority coalition of the Socialist Communist NDP party and the Liberals have come together for a majority government. They've made a coalition. They had a minority government before, now they have a majority, so they can do whatever they want. Some of the tax policies coming with that are going to drive out entrepreneurs like myself. We're going to have to leave Canada in fear of paying everything that we make to taxes, as well as just in general their policies around, around the not exploring the resources that Canada has, I think is not good for the economy. Considering the current environment where commodities are, Canada could be doing so much better than it is. I would love to see it extracted cleaner, in a better, more efficient way. And again, we are already leagues and bounds above other countries. Like, by just reducing production, it doesn't actually save the environment, because then they just take more out of Saudi or more out of Russia or somewhere else where, again, they don't have the same green standards. And so that barrel of oil is still going to be pulled out of the earth. It's just not going to be on Canadian soil. It's going to be in a different, in the US or somewhere else. And they're going to get the benefit, and it's still going to pollute the environment. And the pollution is going to blow across the earth into Canada anyway. So it doesn't make a whole lot of sense. A lot of these carbon taxes, a lot of these, lack of exploration initiatives, the oil needs to be brought out of the ground, right? It's just, again, the energy needs to be produced, whether it's solar or wind. Solar panels are horrible for the environment. Solar and EV batteries are terrible for the environment, right? To make them, produce, it's actually a lot of oil related and other poisonous things. But so Mega asked a question about, hey ML, how you doing? I just saw your comment there, and Mega, yeah, I'm back every week. Is it too late to get out? Yeah, I mean, I have a 6plex listed right now. We're not seeing the same traffic we were. If it had been 6 weeks ago, I could have sold it, but I waited, kept it off market, and I put it on market a little too late. But that said, we haven't seen a dip right now. We're seeing a slowdown. We're seeing people cancel listings. We're seeing offer dates come and go. For people on the ground, realtors that we're talking to, here in London, Ontario, in Toronto, Oshawa, a couple other markets I've been following, we're seeing a slowing down. So the prices are still sticky. It takes a number of losing months for a real recession to happen. So we need to see that it takes a few months before people get desperate enough, they start dropping their price. And then when seller and buyer, agree, first it'll be days on market will increase. That'll be the first signal you'll see at the start of a real estate recession. It lags. It takes 6 months to a year to really play out. Again, at the same time, the government has a policy to bring in immigrants to take the jobs of all the Canadians that are going on welfare and refusing to work. So at the same time, the goal of bringing Canada from 40 million population to 100 million in the next 30, 40, 50 years means we're going to be taking in about 1 million immigrants a year. And so we, at the same time in Canada, have a supply shortage for available housing units. And the government is not reducing the red tape to build. They're making it very hard for builders, very hard for real estate investors who want to add units, who want to take an unfinished basement and put another apartment down there to allow more housing units to handle these, 1 million plus people coming into the country. Interesting stat I just want to throw out there. It was on my Instagram at Mike Rosehart if you want to check it out on my stories. But Stats Canada just did a study checking in on immigrants and refugees, specifically their government sponsor that come into Canada. And the argument is that they come here and they work really hard and they pay taxes and they are net positive for society. Study followed them over a 20-year period. What they found is at the end of 2 full years here in Canada, 73%, I believe it is, of the refugees and immigrants here are still on welfare. in Canada. Collecting government assistance, not working. To collect welfare, you have to be unemployed. So 2 years in, they're unemployed. They're probably driving a taxi, not paying tax, collecting cash, working contractor jobs, collecting cash, which is horrible because they're not paying tax in the system that they're sucking from. That's 73%. And 35% after a full decade are still on welfare. 35%. More than a third after a decade, after 10 years, are still sucking from the system. I'm not getting into the politics on that, but clearly the welfare programs are not working. They're collecting their $1,500 a month or whatever it is. If they have children, it's $650 a month per child, cash, tax-free, deposited. So if they're a Syrian refugee who moves here, have 6 kids, they'll collect more after tax than a doctor makes or a lawyer makes after tax. So why would they work? Because the clawback is at 75%. So every dollar they make, the government's going to take 75% in clawbacks plus tax. So there is no incentive to work. That's how Canada's a socialist system set up for the bottom of society to really flourish here and do nothing. Or maybe not do nothing, but on paper do nothing. It's disgusting. Anyway, don't agree generally with a lot of the plan. I love bringing immigrants in. Let's bring immigrants in who have master's degrees, who are skilled, who have a history of working really hard, who bring capital with them. That's a good thing. Yes, it drives housing prices up, but you know what? With those immigrants bringing money in, guess what? They invest in developing our country, and we build more housing inventory, and then the levels balance out. We have lots of land here in Canada. We just need to start putting money into the economy to build inventory. And as that happens, and as inventory levels catch up, real estate will balance out. So I'm pro immigration. I love it. It's great for our country. But I am not pro, what do you call it? Handouts, I guess. Anyway, it's a real issue. One of the many issues for Canada. I will be exiting Canada. I love Canada as a place to visit. It's a beautiful country. I have a lot of friends and family here and deep ties here. It will be hard to go. I live in my dream house. And every day I waffle. I'm like, do I just pay $500,000 a year and that number is going to keep getting worse and worse the more I grow. But do I just pay this massive amount in total taxes? Or do I leave to somewhere like the Bahamas where I can grow and develop still and build out that economy and pay almost no tax? Or do I stay here where I have a good life here too, but the tax environment is just, and the political environment is just, ugh. Anyway, to answer your question, is it too late to sell off? No, I don't think it's too late to sell. You can still sell now. We don't have any real pullback. We're, I guess, 5% off of some of the frothy highs. You won't see those, 20% over asking like we were seeing before. It's more of a balanced market. We're not growing in the same way. Yeah, I have heard that. Oh my God, that they are calling for a UBI, a universal basic income. I'm torn and conflicted on that. I think that I would like to see, I like a minimum wage. I like a UBI, but I like a UBI tied to community service or giving back to the country in some way. So there should be a universal basic income, but it's tied in some way with strings attached. So like, as an example, you have to do 30 hours a week of some sort of volunteer or something in society to help develop. I think we could go really far if we had some sort of programs that forced the third of the population that's unemployed or underemployed to work, and we incentivize them to work, but they produce. And so people sit on their ass. I mean, they're going to have to get off their ass, but unless they've earned it. I mean, if you've built a business or you've worked 30 years and even if you work 10 years super hard, like triple time, you've put in your 30 years in a 10-year period, which is doable, by the way. If you work 120 hours a week for even 8 years and you compound that, that's the same as working 30 years at a 35-hour-a-week job. It's the same. You could put a whole career in 10 years. That's what I've done the last 11, 12 years. It's doable. I think that if you've put in your time and you were smart about investing your money, you should have a right to sit on your ass because you put in a ton of effort into helping and developing the economy. And with all of that capital, you continue to help and develop the economy. So I don't know. I'm of the belief that you've got to give to get. And so there's got to be some give too. Not just take. James says, how come you never went down the full-time realtor route? Well, James, good question. I didn't get my real estate license until I was already a multimillionaire. So I was at the point where I wasn't interested in trading time for money. That's pretty much it. Um, I could, I could have, instead of doing all the JVs that I did, if I just became a realtor and made a commission on every one of those deals that I did, I would have made an extra couple $1,000,000 probably. I would have made more as a wholesaler than I did as a JV partner. So it's stupid, but I undervalued myself. I didn't take enough of the deal. I didn't structure well. I should have focused on, and if and when I do it again and build another real estate portfolio, this time inside the United States or in a more landlord friendly environment, if or when I do that, I'm going to focus on what I'm good at, which is finding the deals, the deal hunting, and the capital raising. I'm not going to worry about operations. I'm going to find a partner for that. I'm not going to get bogged down in renovations or in property management or things I don't enjoy. And I'm going to structure properly. So yeah, those are things that I learned from. Next question was, James says, immigrants' education doesn't usually transfer. They need to fix that too. Yeah, I mean, and it shouldn't necessarily transfer one for one, but if you have a degree in art or a degree in like math, that's pretty transferable. So there should be a way to sort of have those skills transferable. Being a doctor, there should be some sort of refresh program you could do to maybe in 1 year that could get you to be a doctor here, that kind of thing. Moreover, I think that bringing in immigrants with capital is the best thing you can possibly do for a country. People who are wealthy want to escape China. They want to escape India, et cetera, so forth. In the second and third world countries, coming to Canada is, it's great. And they can, maybe they're not ultra wealthy, but they have $1 million or $1.5 million. They can come build a business here and they can employ Canadians. They can grow the economy. They can buy into the housing market and grow that too, because it's one of the main drivers for our Canadian service economy. It's just net positive to bring immigrants in. I'm pro immigrants for sure. I just don't want people coming and doing nothing here. We don't want to support them. That's not the goal. Are you going to invest all your capital in the Caribbean and real estate or have a mix with Florida and red states? So I'll probably still have some sort of commercial investment in Canada inside of a corp, but I'll have nothing personally, and I'll have no rental properties, no small stuff. I will still probably pay some tax inside of the Canadian corporation. There will be, some tax because it owns Canadian real estate. And I'll have to come and check on it, which I don't mind the business trips anyway to Canada. For sure, I'll be investing in red states like Texas and Florida, places where it's conducive to be a landlord. I like the Caribbean too. I think specifically the Bahamas is an interesting place to call your primary residence and to buy a house there and to be a tax resident there and live 90 days a year minimum. I like the idea of being able to travel and have a tax-free home base. Canada's not a great home base if you want to travel. Canada is pretty socialist. It's a great place to visit. It's a beautiful country. I think that if you make less than $100,000 a year, Canada's a great place to be. So for 75% of Canadians, okay. There's a big woke culture here, that won't ever elevate past that. They've got a bad mindset, and that's okay. But that's not me. So eventually the fit isn't there, and you've got to move and go where you're treated best. But yeah, I think real estate for sure is at least a quarter to a third of my net worth portfolio allocation. I think real estate's a great place to park wealth. It's, I had this fantasy on my dream board of, a primary residence somewhere tropical, so like the Bahamas, let's say, as a tax residence where I live, and then having vacation properties that I Airbnb in, say, Florida, because again, Florida's a quick 30-minute plane ride from Freeport, Grand Bahama. So you could literally be in Florida Monday to Thursday, and then like your kids can be in school Monday to Thursday in theory, and then be, Thursday night you go to the Bahamas and you're back Monday morning again. It's a 30-minute commute. So you could one fantasy people could have is you could literally live in West Palm Beach and live in the developed world, pay tax in the Bahamas, have crypto and other things in the Bahamas, and live in the Bahamas and invest in the Bahamas and be a tax resident there, but then you're allowed to be out of the country 275 days a year. And you can't spend more than 180 days in the US, or you become potentially a tax resident in the US. So you don't necessarily want to be living in the US either, because US, if you're in the top income percentages, the federal taxes alone are over 35% in every single state, except for Puerto Rico. Puerto Rico is very interesting because they have a treaty for anyone moving there, where you can invest in in US equities and collect dividends and have almost no capital gains tax. That's huge. It's the only place in the world you can invest in US equities and pay no tax. So Puerto Rico is number one on the list if you're an options trader, a stock trader. Lifestyle wise, they get crushed by hurricanes. Crime's pretty high there. Whereas like on Freeport Grand Bahama, there wasn't a lot of dangerous crime. People are generally friendly there. Nassau is different story. But in Freeport Grand Bahama, there wasn't as much of that, right? It's some of the family islands too in the Bahamas are completely peaceful. And so that's a beautiful thing. Yeah. Anyway, I was losing my train of thought, but I think it'd be really cool to have houses all around the world. I'd always thought that having, somewhere in like Portugal or something, have a house. Costa Rica has always been on my list of a place to have a vacation property to come visit. Canada, of course, on the water, like on Lake Huron, it's just some of those beautiful, clear, crystal waters, some of the most beautiful sand, just amazing freshwater, massive lake, beautiful on Lake Huron between Grand Bend and Sarnia, some of the best places in the world in the summer to be. And then the Bahamas in the winter, beautiful. Florida, again, like also some amazing spots in Naples. I spent time literally touring all of Florida. I made a full square, a rectangle, I guess, around Florida. I just found that, I found that Florida wasn't somewhere I wanted. We ended up going to Florida thinking we were going to move to Florida. And Florida didn't check enough boxes for me to move to. It's a place I'd visit. Because it's so close to the Bahamas, I think it'd be my exposure to the first world if I needed to go golfing or have a really nice, fancy first world experience, and I want to go to some resort and enjoy myself. You can get that in Florida, right? But I think, yeah, probably my ideal fantasy would be having, ideally it's a resort, like a resort in Florida that's, cash flowing and all that, and I can go check on that business, and I have a reason and a write-off to go check on that business, to write off against that U.S. corporation, that U.S. Earnings, get them down. And then, a place in Canada and a place in Costa Rica, having, multiple places you can go to check on these businesses and sort of design a business around the lifestyle that you want. That for me is the ideal. And so that's what I'll be building over the next 1 to 5 years. And I'm still bullish on crypto and a number of other assets like that. Someone just asked in the comments there, Samuel said, how are the amenities, bugs, and humidity in Freeport? So amenities wise, it's a small island. It's got less than 50,000 people, between 40 and 50,000. So it's a small town vibe. It has a movie theater. It has grocery stores. It's got a lot of water sports and stuff to do. I'm a homebody, right? So like my ideal day is just like having a good internet connection and chilling on the beach. That's just kind of who I am. I have 3 kids though, so like we just have so much fun with the things that we can do. But when we stayed at the resort, there was so much to do. We went on a catamaran. We were playing volleyball, going swimming in the water. They had a trapeze thing we were doing. It was super fun. They had kids zones and stuff. There's just a lot of cool things you could do there for sure. But it's designed around that island life. So everything's a little bit slower paced. Are amenities as good? No. Is there a decent private hospital there? Yes. The main international airport is in Freeport. The main trade is in Freeport. So there's a duty-free exemption right now. So you can import a car or like renovation materials for nothing. So you can just go buy them at a Home Depot in Florida and 60 miles, ship them over and bring them in for free. Duty-free right now. And after the hurricane with COVID and everything, they made a restriction as such lifted for the duties and stuff. So there are some advantages too, especially if you had a business going there too. You can drive your car around and get cheap gas, like $3.50 a gallon instead of bonded gas is cheaper. But anyway, interesting stuff there for sure. I think that the call of that island is that it's a much more peaceful, safer. Prices are much lower than Nassau. I would say you could still find really nice properties for under $500,000, whereas in good areas, pretty much on the beach, which was nice. And you had enough amenities that you weren't on like a family island where there's like no grocery store. You know, like you've got everything you need and a major international airport, and the ferries go back and like there's the fast ferry that goes back and forth to West Palm Beach. So you got a 2 hour ferry that you can just hop on the ferry and go back and forth. You don't even have to fly if you don't want to, but the flight's 30 minutes. So that's the proximity that's nice, that the international airport's there. So there's some direct international flights, et cetera, so forth. But for a number of reasons, if you had a private plane too, I think Freeport would be a top choice to go back and forth. You could just store it at the airport there. Compared to Nassau. Nassau for sure bigger, like almost 10 times bigger population wise, but again, crime and other issues. But yeah, sure, more amenities. Yeah. Humidity was, sorry, to end the rest of your question, there was like no bugs. I didn't get any mosquito bites. I didn't really see much by way of bugs. It was pretty good. The humidity was non-existent when we were there. I don't know how it is year round, but I think 300 days a year of sun. It was cool. Yeah, not cool. It was nice and mild in the evenings. It got cooler in the evenings. During the day, it was warm. I would say 25 to 27. Not so hot that you're, like it's super hot, but warm. Nice and warm. Whereas Florida had a lot more humidity, I noticed. That was a difference. It was more muggy in Florida over the couple months we were in Florida. So I'm going to get to this question in a sec here, but I'll do these other ones first. Okay, here we go. Are you going to invest all your... That's where I was at. Okay, so it's called the brain drain. They don't accept the credentials and it wastes a lot of human capital. Yeah, I mean, that's something we want to look at too. We'll bring people in. At the same time, we want to make sure that we don't have a doctor that went to a joke of a university in some third world country and they wouldn't be competent doctors here and wouldn't be, as well versed. We want all of the credentials to be at least a minimum bar. So there should be some way of checking in to make sure, and some sort of course that catches them up and tests them to make sure that they're, adequate in their field. Shanak says, you mentioned once that you have a few projects going on in Florida. Why not shift there instead? Is that because of taxes? So yeah, there's a number of reasons why I haven't shifted to Florida yet. One, I don't want a green card in the United States as of right now. The only way I would ever become a US citizen is if I move to Puerto Rico. It's still on the list, it's still possible. As a stock trader, it has the most favorable tax environment and you get a US passport. So Puerto Rico definitely wasn't on my top 3 choices. I went with Bahamas instead for a number of reasons that I've talked about on this channel. It just won out for a number of reasons for me. One of them was the proximity to Florida, the affordability, the fact that I could live there 90 days a year, whereas in Puerto Rico, to get the tax benefits, you've got to stay at least 183 days, I believe, on the island, whereas Bahamas only required 90 days to have your tax residency. So you could travel the world more and spend time in many developed countries and enjoy your life while paying no tax. Elizabeth, welcome. Welcome to the stream. Welcome to the channel. Yeah, so to answer your question, it just wasn't a good fit. And if I had stayed in the US, I could have got my E2 visa or E5 visa, which is through investment, or bought a business there through the E2. If you have money, it's really easy to buy citizenship pretty much anywhere. There's very few countries I can't get into and get a full citizenship. Money buys. You buy a business there, you employ some people, boom, they give you citizenship. Almost always by investment, you can get into to get a passport there. But I'm going to keep my Canadian passport. I'm proud to be Canadian. I will keep the passport. I will lose my healthcare and I will lose my tax residency, but I will still be a Canadian. I was born here. I'll always be a Canadian. I have the right to come back to Canada at any time. And when I travel, Canadian passport. There's no need to renounce that. There's no need to even get a Bahamas passport. All I want is the 10-year renewable tax residency. I want to live in the Bahamas. I want to pay tax in the Bahamas because the Bahamas doesn't have a tax time. There is no personal tax filing. That is very advantageous. Just the fact that you don't have to report what you're doing personally is nice. It's a ton of work. I'm about to go through tax time again here in Canada, and I'm going through all my receipts, trying to figure out everything. I'm almost always trying to err on the higher side of what I owe because I'd rather pay the government too much than go through the stress of an audit. So like just going through all of that is, anyway. Freeport also, I just saw something pop up for the initial investment, 500,000 USD, but it's actually being raised to $750,000 USD for the tax residency piece in the Bahamas. But you can also just buy a house for $90,000. There was a house we offered on that was 1,700, just under 1,700 square foot bungalow, 3-bed, 2-bath, built in the 90s, 5 minutes to the beach, for $90,000 USD. It needed work. It needed probably $40,000 in renovation, but you can get a nice property in Freeport, Bahama for pretty cheap. And it was in like a B neighborhood, like not even bad, like a safe, decent neighborhood. And you could apply for an annual home residency card. So you'd have a card to travel back and forth. If you need to the Bahamas, you show your card when you're coming in. You're a citizen. You're basically like a resident there. I think it's called a home residency card. And you can apply every single year for that. That's annoying. You have to go through like a physical every year and like go to a doctor and get a physical and probably do a bunch of paperwork. But you could invest less than $750,000 and just renew that every year and live in the Bahamas. And then you'd therefore become a tax resident, would be my understanding. But you have to renew every year. You just invest in $750,000 USD. Boom, you get the 10-year residency. Your spouse comes with you. Your kids come with you under that permit. So it's just super easy to do it that way. If you're poor, I say that's the wrong way. If you don't have a lot of assets and you're not generating a ton of income, the Bahamas doesn't make a whole lot of sense to move to. Canada's a great place to be if you've got less than $1 million. I mean, if you're making less than 100 grand a year, $1 million can generate you 100 grand a year in dividends with a little bit of leverage safely. Not $100,000 in Canadian eligible companies like telcos and utility type plays and financial Canadian blue chips can generate you enough to live on and live fairly well in Canada. Tax free. Canada gross up tax credit for eligible dividends, Canadian eligible dividends, allows you to have no tax effectively on $50,000 per spouse. So $100,000 a year plus your tax free savings account. So there's just, again, with house hacking and all the other great things, Canada's a great place to be if your income is lower. When you start to get to that point where you grow, and we eventually all of us entrepreneurs watching this in a 10-year period will get to that point. And that's when we start making those decisions to move. It's also about lifestyle too. I mean, I guess if you're poor, the Bahamas is still really nice in comparison to the winters in Canada. Like my long-term plan, even if I was going to stay in Canada, was to snowbird, to go to Florida, to go to Costa Rica, to go to Bahamas, whatever, and enjoy my winters where it's warm and then come back to Canada for the summer. And I'm like, geez, well, I wanted to spend 8 months a year here in Canada. What if I just spent like 4 months a year in Canada and 8 months and moved somewhere else and just vacationed, instead of vacationing to somewhere warm and living in Canada, why don't I live somewhere else and then vacation to Canada? And now I go from paying 6 figures in tax to no tax, potentially. That my mind was like, whoa, this lifestyle design that I was looking for anyway, which is like, I wanted to snowbird, I wanted to get away in the winters. I could just re-engineer our life a little bit. And one of the things we're looking to do right now is I'm looking to hire a personal assistant to help optimize and improve our life. I'm also looking to hire a full-time teacher / nanny. I have 3 kids. It's a lot on my wife. We need the help. And maybe that person's one person. Maybe they're our nanny and they help us with some of the stuff with the home businesses that we are involved in. And that person's like, a second hand, an extension of our family. And that's part of the vision I've always had. And that's part of that homeschool vision I had too, is like, I want to have my kids educated in business, educated in life, more than they are about like calculus and functions. What a waste of 5 months of my life studying calculus and vectors. I've never once used that beyond that grade 12 course before university. Or like, there's just so many examples of classes that I've taken where I've never even used trigonometry ever in my life. Like, what a waste. Unless my kids want to be like, that's their field they want to go into, huge waste of money. Anyway, lost my train of thought here. Go back to the next question. How about that? Yeah, to answer the last of that question about projects going on in Florida, Florida's not that great from a tax perspective. Florida has no state tax. True. That's great. It's way better than California, where California has federal taxes and then state taxes on top. So the federal tax, like 35%, plus another 20-something% for state tax. You're looking at 55% tax in, say, California at the maximum bracket. In Florida, the Florida corporations have like a 5% corporate tax. Personally, you have no state tax, but you still have a 35% or 36% federal tax. So it's not that much of an improvement going from Canada to Florida, especially if you're a high income earner. There are better tax loopholes, I think, in Florida, so you could shelter more of your income and pay less tax through deductions. But yeah, so and also the 1051 exchange is nice. 1052 exchange. I forget what it's called, but yeah, basically we can port the capital gain into another deal and not pay it. What is the best and quickest way to become a multimillionaire starting with 100 grand? Samuel, oh, got a bit of dust under the nose. Lost my train of thought again. So $100,000 to multi-millions. I think the best way to do that is through leverage. Debt is your best friend as an entrepreneur, as a real estate investor, as a stock investor. Whatever it is you're doing, use debt, manage debt, find cheap debt, use it wisely, but debt is the way to go. Debt can also eviscerate all profit and end up putting you in the loss. The worst case is like bankruptcy and start again. That's the worst case scenario. Darn. But debt can amplify your growth. So as an example, if you buy a business, and by the way, even guys who are against debt will advise using vendor takebacks to buy businesses 80% debt. So vendor financed, right, for most of it. So debt, every business owner loves debt. They try to get as much of it as they can from the vendors, from the banks, et cetera, and so forth. Debt is a good thing. If you buy one business in cash, it's the same as buying 5 businesses at 20% down for each business. Would you rather have 5 businesses or 1 business? The answer is 5 businesses. The same is true for real estate. Would you rather have 1 property paid off in cash? You never want to pay on your mortgage, ever. It's a stupid idea. You can borrow money against real estate at 2 and 3% interest. You can go invest that in a 8 cap, another rental property, or in a dividend stocks, or in anything that produces more than 3%, because 3% is a terrible return. You can borrow and then make a spread on the difference for every dollar you borrow. So you always want to keep your assets utilized. It's good to have free cash flow available and lines of credits and emergency funds, and just cash on hand is also good to have, especially for opportunities that pop up in your, a business falls in your lap, or a sweet deal falls in your lap, and it's good to have cash available. I would take the debt and keep it as cash and, invest it as opportunities come up, as opposed to having no debt at all. So debt's a good thing. It's the first thing. So with $100,000 to turn it to millions, you need debt. You need to be borrowing other people's money and putting it to work, whether that's through joint venture partnerships, through the bank. Ideally, it's through the bank because it's the cheapest place to borrow money. There is nowhere cheaper. So debt is how you're going to do it. $100,000 will buy you a $500,000 property. So as an example, if I had $100,000 right now, I would go search Kijiji, Craigslist, knock doors, talk to realtors, call 150 realtors in my local market. I would go on every single investment property listing where I saw a realtor, and I'd call them. Hey, you have a duplex for sale. This one isn't for me, but I'm wondering if you have anything that pops up that meets these criteria. Anywhere in the market. If it's off market, I'll put an offer in, before you get it on market. And you can usually negotiate better deals before it's on market because there's no competition. Go find a property, and you'll have to look through 100 properties to find one that'll meet this metric. But you'll find a property for 500 grand that's worth 700. But it needs a new kitchen, a new bathroom, maybe a roof. It needs 50,000 in work. You have to manage all that and bring guys in. That's part of the business of real estate. So you buy that property. And I like real estate because also you could find a business too and just buy a $500,000 business, put $100,000 down. It works the exact same way. I treat real estate like a really safe, conservative business. It's easy for people to do. It's easy to find. There are thousands of properties. There aren't thousands. Like I can go on right now on the open market for any businesses for sale. There's not much here in my market in London, Ontario. There aren't very many businesses for sale, especially at good cap rates and good ratios that make sense. Multiples to sales, multiples to EBITDA. The multiples aren't great right now. There's a lot of money floating around and people are trying to buy themselves jobs. So I haven't found a lot of great businesses for sale in London, Ontario. But properties, and again, properties not so great either, but you still find properties that are undervalued. Even in a bull market, you'll find it's actually easier in a bull market because by the time you're done, that property you bought for 500 that was 750 actually refinances at 850 because you got appreciation the whole time you're fixing it up. So bull markets make it even easier. That said, a bear market or a cooling market like we're going into now, you can negotiate better deals. So that $500,000 property, you can get it for 450 maybe right now. So you get in that property, and you go to bank mortgage for 399, and you put 100,000 of your own money, and you buy this property for 500 grand, and then you go to the bank, say go get a business loan or something. Say, I'm starting a graphic design business, and you buy some computers. You walk into Bank of Montreal, you walk into Scotiabank. If you say I'm starting a business, and I need a $30,000 small business loan, they have auto approval up to $40,000 at Bank of Montreal and Scotiabank. I know lots of friends who have no income, no revenue, brand new business, walk in $40,000 business line of credit. They do it at 3 banks all at the same time. Doesn't show up in your bureau right away. So they apply for $120,000 in business lines right away. You can buy a second property. Let's just pretend you didn't do that. Just go get some personal lines of credit. It's $10,000 at Tangerine, $10,000 at BMO, $10,000 at Scotiabank. I've coached dozens of people through doing exactly this. So I know people can do it. I've watched them do it. And anyway, go get some lines of credits. Now you get your renovation done on the property. You go back to the bank, or you just sell the property, and you post it for $750. You sell it. You make the profit. You flipped it. Ideally, you don't sell it because you don't want to pay the tax. So you keep it and you refinance it. You find a way to refinance it. You bring a JV partner on something, and you're able to then take that capital and pull it out and buy another one and do the next deal. And now you've created yourself $250,000 in equity plus your $100,000 you put in. You have $350,000 in equity on that deal. After you're done, you pull out your renovation capital. Maybe you pull out some of your down payment on a good, BRRRR. That'd be the ideal method to do it. And then you go again. And the property is then rented. It's a duplex or something. You rent it out. It covers itself. Maybe it puts a couple $100 a month in profit in your pocket. Ideally, it puts a little bit of your money in your pocket, but at least it's covering itself. It's servicing its own debt. So now you've got an asset. You can lever. You can pull the capital out. You do it again. Get another one. Very quickly, after 4 deals, you're already at $1 million. You turned 100 grand into $1 million in 4 property deals. I mean, it's dead simple. It's not that easy for sure to find a deal. You're going to have to knock hundreds of doors. Like, you're going to have to talk to a lot of realtors. You're going to go through a lot of properties because 99 of them are not going to meet those metrics. You're going to buy for 500, it's worth 600. You buy for 500, it's worth 550. That doesn't meet the metrics. That's a no-go. But eventually, you're going to find one that makes sense. And then you do that and you go forward. That is the fastest way to build wealth, is buying businesses or building businesses around real estate, I think is the fastest way. Once you've built up some capital, then you can use leverage in your stock portfolio. With a dividend portfolio, you could, a lot of the telcos and stuff, I don't know what they're trading at now, but like between a 5 and 6% yield. If you lever up 1 times, you can go 3 times Interactive Brokers, but if you lever up 1 time and you leave the other 2 times as available room in case we have a recession, you lever up 1 time, your leverage takes your dividend from 5-6% on your capital to 10-11%. So you get 10-11% basically risk-free return plus any appreciation on those stocks, which will appreciate another 5 to 6% a year on average over a 10-year period. So you're looking at like a 15 to 20% growth rate just in the stock market, right? So, and it's favorable from a tax perspective too compared to private lending. So there's that. There's also private lending, which is way easier. If you just wanted to park money, not worry about it, and let it compound, you could lend it to a flipper, real estate investor, do it inside of a corp, make it an active business, lend to a few people, structure some of it as appraisal fees and deal review fees, and now it's an active business, qualifies in Canada for the 13% small business tax deduction, so it's only a 13% net tax inside your corporation. That's an effective, great way to lend. So you could structure it so when you're lending to flippers, instead of giving them a high interest rate, you charge them a low interest rate, but you charge them a deal fee, a deal review fee, a site inspection fee every 2 months or something. Go check on their flip, and like for an hour, go check on it and bill them $1,000 an hour. And now you've made it active income instead of passive income. That's a better way to do the lending piece. If you're going to build a business around private lending, do it that way, from a tax perspective here in Canada. Anyway, that's all I got for that question. You're getting some nuggets tonight. If you were to start into real estate now, in the next 2 months, with a recession potentially looming or coming, would you still consider Southwestern Ontario, or would you go to Alberta or say Halifax? I don't know. I live in Ontario, and I have a specific set of skills in Ontario. So I think that Ontario is still a decent place to invest, specifically properties in the water. I'm extremely bullish on. I'm actively looking for some sort of resort on the water. So if anyone knows of any cottage, multifamily complex, multiple cottages on the water, anything between Grenban and Sarnia, hit me up. I'll give you a huge referral fee if you can help me close on something. I'm just throwing that out there to the universe. I want something between $0 and $4 million purchase price, in that range. Just throwing that out to the universe. It's part of my long-term vision board. But yeah, I mean, prices have gotten really out of whack here in London. I'm not that bullish on prices here. For a house hack, sure, like get yourself into the market. I don't think that we're necessarily going to have a huge crash. I think it'll be flat for a long time. I think that, there's yeah, I mean, Alberta has already had a good spike since oil started to peak here. I think oil is going to come back down a little bit in price, but and natural gas and some of the other commodities that have spiked, I don't see them going crazy high from here. We've already seen a huge increase, but these highs are really good for the local oil and gas and some of the businesses in Alberta. So I am bullish on Alberta. Halifax is interesting too. My cousin's going there for school, and he was telling me that it was a 9-bedroom for like 300 grand, student rentals and stuff. So there's some great great opportunities out there. It's like London was 5 years ago. There's a reason the prices haven't increased to the same degree. There isn't as much foreign investment. There isn't as much international attention. The market hasn't appreciated in the same way. And so it may not appreciate in the same way. But yeah, I think, Calgary is interesting. I think Alberta is interesting. I think that Halifax is interesting. I don't specifically know the landlord-tenant board rules there, but I hear Alberta is more favorable than Ontario. The rules are not as tenant-friendly. It's not as socialist. They're a little bit more conservative, which is good. They protect the people who own the property. It's like, hey, the tenant doesn't own this property, you do. So let's be fair. Here in Ontario, it's like, oh, actually, the tenant owns the property, and they can stay here, and you can subsidize their living. That's kind of the mentality in Ontario. In Ontario, the only way I'm owning real estate is if I'm Airbnb-ing it. I don't want any long-term tenants. It makes no sense here in Ontario. It's a horrible business to be in. Regardless of where I think the real estate prices are going to go, it's a horrible environment to be a landlord. I have zero interest in being a landlord. Airbnb is another thing. Short-term stuff, you can control the property. It's still yours. They're short-term stays. You have a credit card on file to do damage. You can't even take a damage deposit in Ontario. It's illegal. If a tenant damages the property, you got to sue them. And it never goes anywhere. Tenants get out of paying all the time, and they can just trash places. It's a real disgusting environment to be a landlord. But Airbnb is a different story. Thomas says, hey Mike, you previously mentioned that you bought a farm near Ottawa. That's true. I did a few weeks ago. We bought a 48-acre farm with a big barn on it. It's a house built in 2015. It was a great little deal. 15 minutes to Kingston downtown. So it's a 15-minute drive to downtown Kingston. It's a great buy and hold property. I have a partner on it who's local and active, and so he'll be, he's half on the deal, so he'll be managing a lot of the stuff. We'll probably Airbnb that because, again, I don't trust putting long-term tenants in. I don't think that the power imbalance makes it a great business to invest in. By that, I mean long-term landlording. So, yeah, I think that's a good piece of property that is going to be bought inside of a corp. It's not going to be owned personally. I will end up filing an exit return from Canada probably in the next 3 years at the maximum. And I'll be a foreign investor. Well, I'll be a Canadian citizen, but I'll be not a tax resident. So it just is what it is. My Canadian corp will be owned by I'll sell it so it's owned by a Bahamas corporation, and or owned by me personally, I guess, as a foreigner, and I will have my Bahamas corporation work for that corporation, or I will employ people through my Bahamas corporation probably, and invoice in my Canadian corporation to bleed the net income down. There are lots of strategies and stuff. I got to talk to some good accountants to find out what the best strategy is, but yeah, I will own nothing personally though in Canada. The last part of that question was, what was the motivation? So I'm still bullish on land in Canada, especially within, call it 20 minutes of any major city. Now, Kingston has Queen's, so it's the second best university in Canada, arguably. The Queen's Commerce program is like the second or third best program in Canada, arguably. I went to the Richard Ivey School of Business at Western, and it is the best business program in Canada. I don't even think it's arguably, it's like de facto is. There's not even debating that. But anyway, again, being around London, if I could have bought a 50-acre farm for 625 grand or whatever we paid for it, I would. But I can't find those deals. I used to be able to find those deals. Yeah, I'm bullish on land. I think that, farmland or just land in general is a good place to park wealth. It's not, so I didn't invest in it thinking I'm going to make a whole bunch of money. Like, I think I probably could clean the property up, redo the guest house so it's proper, make the house nice. We're going to finish the basement, clean it up. It was kind of like a hoarder's kind of setup. And just reposition the property. You could probably sell it for $800,000 or $900,000, maybe $1 million. So there is a lift there of a few $100,000 we can make. But for me, it's more of a long-term play. I think it really has a lot of value to hold something like that as a, if the world goes to shit, you got a whole bunch of land, you're safe. So it's more of like a gold investment or a Bitcoin investment for me. It's like the safe real estate stuff that produces enough cash flow from, say, Airbnb-ing the farm that, we wouldn't lose any money on it. So that was the thinking with that, was parking money. Yeah. Ivy Love it. And I mean, it's a good program. It's an expensive program, but you pay for what you get in this case. By the way, if you're watching this and you're one of the 45 people, hit that like button for me. I have no monetization on, so the only way that YouTube knows that this video is good is not by the ad revenue that YouTube is making. It's by the thumb up and the watch time that you guys give these videos. So appreciate the thumbs up, it means a lot. It's instead of watching an ad, just click that thumbs up. It's a lot easier. It makes me zero money, whereas when you watch an ad, I get a penny. So maybe I should put an ad back on the replay. For all the people watching the replay, let me know in the comments. Can I put an ad on? Maybe at like the start of the video, just one ad, make a penny. It would tell YouTube that my video is good, and then it would get YouTube to promote it to a wider audience. I've not monetized this channel at all. I could make an extra probably $600 a month if I just put monetization on these videos, but $600 it's a rounding error. I do this for charity, so I'm not trying to make money out of it. Next question was, any NFT investments? So all my NFT investments have been poor. I invested in a few gaming projects, NFTs, and a few other things that, buddies just told me to invest in, and they were pretty much rug pulls. So my investments in NFTs have been shitty. But again, very, very small amount of money I was playing with NFTs. Like, very tiny amount of money. But yeah, NFT projects could make sense. I think NFTs are the future. I'm very bullish on NFT technology, on ways that businesses can utilize NFTs in the coming months, as well as the metaverse. I think that is the future. I'm bullish on companies like Facebook, as an example. Gary Vee has some great NFTs. I think buying some of the blue chip NFTs, you can't go wrong. 99% of NFT projects are rug pulls or will eventually go to zero or near zero in the next 10, 15 years. So just remember that 1% of NFT projects are going to be here in 10 years. Be careful what you're buying. It's basically gambling. Yeah. Okay. Hey, Mike, how would be the best way to prepare? So parapa param, or param, to take advantage of future opportunities. I think the best thing you can do going into this economic environment where we are going to have a recession, and that recession will bleed over into real estate as well. Real estate is not immune. If anything, real estate might be more greatly affected than some of the growth and tech stuff, because interest rates are so strongly tied to real estate. At the same time, though, if Jerome Powell and the Feds fail at tightening some of their fiscal policy and raising interest rates to combat inflation, and inflation continues to run wild, real estate prices will balloon, because cost of supplies to build new real estate will be going up. Labor will be going up 10, 15, 20%. That will trickle into rising prices. So on one hand, we have cost of everything rising like crazy. On the other hand, we have interest rates rising, which should suppress the cost of goods and get people to start saving and investing, and hopefully will result in the balancing of the economy. It's very hard to get it perfect. Almost always when they spike rates more than 6 times in a 12-month period, which is what they're forecasting, they're going to have to do, we go into recession. So it's long-term good, short-term bad. That said, immigration could just outweigh everything. Doesn't matter if rates are increasing if immigrants are coming here with fat wads of cash and buying properties, or there's a housing shortage. Again, an issue of You know, if people have capital, they will continue to buy. It won't be as many speculators. It'll be harder to qualify too. As rates rise, the ability to qualify for properties goes down, and so people can offer less for houses. So we should see a pullback in the real estate market. There are bearish factors like inflation. At the same time, interest rates rising is, very bearish, whereas inflation is very bullish, I would say, for real estate prices. So I don't know. There are forces acting against and for real estate. It's going to be a rocky couple of months. I think that even in my stock portfolio, it's going to be very, very rocky for the next few months. I'm 70% cash right now, and I locked in some major losses. Like I sold off some of my PayPal shares that I bought at 209. It hurt to close half of that position out, but I'm like, you know what? I don't feel great about PayPal over the next 12 months. I think it's going to be rocky. And so I had to take a loss, it's a $100,000 loss, cut in that position. But I'm like, you know what? I can take that capital and I can put it in a better place and I can earn more money with that. So I'm buying more Facebook shares as an example. Intel is another company that I love, trading at like a 9P ratio. Facebook, again, like a 13P ratio last I checked. Might be 15 now with the price coming up a bit. At 190, it was really a bullish signal for me to be buying Facebook shares. But, or I guess it's called Meta now. Meta shares. I gotta wrap this stream up. I already started late and my kids are going to bed, so I'll do a quick wrap up. But the answer is, in a high inflation environment, it makes sense to take on a lot of debt. Very smart, because you can borrow money, say from the bank at 3%, and if inflation's at say 6%, then you owe 3% less. Like you got the money for negative 3% effectively, right? So debt is good in high inflation environments. Get as much as you can, put it into safe assets. Those assets will be lifted. Problem is tax rates are also very high because they inflate the value of all these goods, and this fake increase, because your buying power is the same, but the assets appreciated in value. You can buy the same amount of said asset now that's inflated in value, but the government takes a chunk in the form of capital gains tax. So it's not all good. It's good for the government. Inflation is actually really great for the government, so I don't see them wanting to curb inflation entirely. Do you always buy options and call? What about straight share buy? So no, I never straight buy shares. I always sell puts and then get assigned. If I really like the company, I will sell deep in the money puts. So if the shares are $100, I will sell like, puts that'd be like 105 or something. And that way I can get guaranteed assigned. And then I will sell calls on them to get them taken away. Or I won't. I might just hold them and sell calls way out of the money just to get a little bit of something on those up days. But yeah, I run the wheel for the most part. And it's a good strategy. Every time I was holding the bag, when I was holding shares, like I blew up my account with shorting, stopped shorting, I don't short anymore. And I was right on that short trade if I just let it play out on Newegg. Newegg spiked to $70 a share. I got margin called, closed at half my short position. I tried to stay on it. I stayed on it until 40, and then I closed out the bear call shorts, and then it dropped to $5 a share. Had I let that trade go all the way through and didn't close anything out and just stayed short and just held my balls and closed my eyes, I would have made $2 million. But instead I lost $1 million. And it's such is life. I made it all back. On average, I try to make 50 to 100 grand a month options trading, and that's one of my 5 main sources of income. However, January to now, I was overly exposed to growth in tech, and I had a 20% drop in my portfolio. It's come back a bit. I'm down maybe 16% right now, which is horrible compared to the QQQ, which is down 9%. So I'm doing worse than the NASDAQ as of right now. The last 2 weeks, I was beating the NASDAQ up until the last 2 weeks. I stayed short. I'm still short on them. Not net short, but I have a huge hedge position on the NASDAQ. And so, yeah, I mean, it'll work if we have a nice big spike down and I can average down. But if we continue to be bull like this for the last 10 days we've had in a row, it's been a huge pullback. And again, it didn't make a lot of sense. It's, I don't know. The market's just turned super bullish. And we're still headed for high interest rates, high inflation, commodity prices out of control, oil's out of control, still on looming war. I don't know. Coming out of a pandemic, I don't know why people are so bullish. I'm not bullish. I'm bearish. And that'll pay off at some point. But cash is the best way to answer that question, is the best way to prepare yourself for a recession is being heavy in cash and debt. Debt is good. Cheap debt is good. Expensive debt, not so good. Against cash flowing assets. So ZR Wooten says, what are your thoughts on financial advice as a career? So for a time, I got my LLQP and my financial advisors. I worked as a financial advisor at Freedom 55 for a bit and then on my own as well. And it was part of my vision. I love giving back. I love helping people. It's just trading time for money. It's not something that I'm interested in right now, but it is a passion of mine. Like financial planning is the thing I was meant to be put on this earth to do. Next to deal hunting, like finding a deal on cheap groceries, finding a deal on a property. I love deal hunting. I love negotiating. That's one of my loves. But my second love is financial planning and financial advising and helping people. I love talking about money. I love talking about structuring your money effectively. I love talking about business or anything related to business and money. So for me, it was a good fit, but I am too wealthy to be doing that. It's still on my bucket list to build a financial advising or robo-advising or some sort of business in that sphere that will help people go from saving 3%. The average Canadian saves 3% of their income. That's shit. Like, they're saving almost nothing. No wonder people are fucked in retirement and screwed, and it's just horrible and no one has any money. Bad financial habits. And then on top of that, once you do save some money, no one knows what to do with it or how to invest it or how to, like people don't even understand. They listen to common Dave Ramsey type crap where it's like pay on your house. What? It's like, debt's bad. Debt can be great. It can be a great instrument in your business. It can be a great instrument in your portfolio. It's part of one of many tools you have at your disposal. People don't look at it that way. People are afraid to talk about money and they're afraid to optimize. And it's sad. I would love to make a dent there. I think Canadians and Americans and just in every walk of life, learning to manage your money better and more effectively is probably the best way to have an impact in improving the average person's life. Money pretty much equals happiness to an extent. Like, it can almost buy everything. It can buy a better relationship. It can buy travel and happiness and food. And if you're struggling and you're stressed, it can buy psychological counseling. It can buy, the time to fix said problems in your life. It's, money equals time. It can buy you time. And what can't you fix with unlimited time? What can't you fix with unlimited money? There's very few things. Even mental health issues, health issues, almost always can be fixed with money. Not always, but almost always. With enough time and money, you can focus on your health. You can sleep better, you can live better, you can have less stress. I think financial advice and financial planning is one of the best industries. And there's so many hacks that don't know what they're doing, that are just selling high-cost mutual funds and insurance to people and providing crappy quality advice. And it makes me sick. Eric, when can I work for you as a GPU guy? Definitely, I need to. It's on my bucket. One of the things on my bucket list for this year to do, on my hit list for this year. Let's have a chat about that. There's definitely an opportunity there. Get some rigs built, get a farm going. I'm trying to find a good location close to where I live that would have a good power setup. Anyway, I think I'm through all the questions. That's right, 31 likes. We need more people to hit the like button. Let's do it. Let's get 50 likes right now. Click that like button. Let's get it going. It's been 64 minutes. I gotta go put my kids to bed. Thank you everyone for tuning in and watching the stream tonight. You guys know where to find me on Instagram, Mike Rosehart, and on Facebook. Again, Mike Rosehart. Look for the little blue check mark beside Mark Rosehart on Facebook. For some reason, the Facebook or Meta has given me the verified blue check mark on Facebook. They've considered I'm a notable person that needs the protection of the blue check mark, but then on Instagram they said no. So I don't know. I'll continue to wait and see. But you can find me on both those platforms, and of course every week here from 7 to 8 p.m. Eastern Standard Time on YouTube. All right, everyone. See you next week. Remember, the secret to unlocking a wealthier you: 3 levers. Spend less, earn more, and maximize returns on the difference. Have a good evening, everyone.